parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up.